Rigetti's institutional volume is 25% above average. Wall Street sees a speculative pump. The engineering reality is a supply chain pivot to scalable modular chips. Two high-conviction signals are flashing, and one call today might surprise you. This is Denver Stock Lab. By Rigetti at 74. This quantum play just crossed the engineering threshold. Institutional volume is 25% above 20-day average, pricing in their scaled multi-chip architecture, not lab experiments. Unlike superconducting rivals still trapped in single-die bottlenecks, Rigetti's 84-qubit Anka, two system chips with modular coherence management. The lab sees yield stability in 300mm wafer runs the market hasn't priced. Quantum economics just turned real. Rigetti's hardware is a high-risk liability because their Anka-class processors still struggle with 2-qubit gate fidelity, the accuracy of operations between 2 quantum bits, trailing the 99.9% industry benchmark required for error correction. While the stock jumped 24.4% to $21, the engineering reality is trapped in the dilution refrigerator. Rigetti uses superconducting loops that require millikelvin temperatures, units of absolute cold near minus 459 degrees Fahrenheit. This architecture faces a massive scaling wall compared to IonQ's trapped ion approach. IonQ uses individual atoms as qubits, offering superior coherence time. The duration of quantum state remains stable. Rigetti's multi-chip tiling strategy aims to bypass die size limits, but interconnect latency. The delay in signal transfer between chips remains the primary bottleneck. Today's price surge is momentum-driven, ignoring the brutal physics of quantum decoherence. Quarterly financials showing modest revenue momentum for RGTI. Rigetti is currently a high beta, a measure of a stock's volatility relative to the market, hedge against a fractured global supply chain, surging 24.4% as trade protectionism turns silicon into a geopolitical weapon. While the 10-year yield sits at 4.67%, signaling bond vigilante, investors who sell bonds to protest inflationary policies. Pressure, Rigetti's 198.9% revenue growth offers a rare escape from the gravity of high rates. As new tariffs on advanced nodes threaten the global supply chain, the market is repricing Rigetti as essential sovereign infrastructure. With recession risk at a low 5.3%, capital is abandoning software and flooding into hardware-level resilience. The lab sees this as a pivot to computational sovereignty. The only defense against a trade war is owning the underlying physics of the processor. RGTI reported earnings per share of negative $0.04, beating the Wall Street estimate of minus 0.04 by 4.1%. A solid beat that signals strong execution. RGTI is trending higher, currently at $21. Here's the official story. Rigetti CEO just told investors the company is positioned to capitalize on quantum advantage in AI workloads and building supply chain optionality to de-risk execution. That's the glossy press release line. Quantum hype, AI adjacency, and resilience theater. Now flip the table. Insiders net sold 40,989 shares in 90 days. That's not a liquidity event. That's a pattern. When executives sell while the stock is still in early-stage dilution mode, it's a signal they see the cash burn runway before the market does. EPS beat by 4.1%. Fine, but R&D spend is 865% of revenue, up 23% YOY. That's not efficiency. That's desperation to outrun physics. The momentum breakdown for RGTI. RSI sits at 59, pointing to bullish momentum with buyers in control. MACD is currently bearish, with downward histogram pressure. Rigetti's bullish momentum is surging because institutional volume is 25% above its 20-day average, signaling that the market is finally pricing in their scaled multi-chip quantum architecture over experimental lab toys. With the stock at $21, well below its $58.15 annual high, the 0.24 put-to-call ratio, the number of bearish bets versus bullish ones, suggests massive conviction in their hardware roadmap. But the bear case is simple. Rigetti faces a TDP wall, Thermal design power. The heat limit a system can dissipate as they scale qubits, while aggressive tariffs on specialized cooling components threaten to crush their already negative margins. The critical question for the lab is whether Rigetti can achieve quantum advantage, the point where quantum computers outperform classical ones before their cash burns out. Our answer is that the institutional accumulation suggests a government contract is the likely bridge. With an AI score of 74, we are buyers at the $15.96 support level, targeting the $26 call strike as the primary breakout catalyst. Rigetti is no longer a science project. It is a high-stakes infrastructure play. Rigetti's 74 point buy signal hinges on 300 basis point margin expansion from packaging yield gains. Is this quantum compute breakout already priced in, or is Wall Street still asleep on die shrink advantages? Tell us below. We're engineers, not advisors. This isn't financial advice. We share data. You do your own work. Past performance? No guarantee. Stay sharp. Question everything. Until next time, this is Denver Stock Lab, signing off.